Hey, Tim, it's Jeff Tamburello, the broker owner of Steelbridge Realty. Wanted to talk to you today about self-employed people getting mortgages because it really can be a challenge. The mortgage industry, I've always thought, was primarily set up for kind of your W-2 employees, and most of the agency stuff, that's what works for them. But if you're a self-employed business owner, particularly, what's out there for you?
Yeah, well, Jeff, first off, thanks for having me, man. I appreciate it. You're dead on right. Self-employed, especially since the meltdown, which you and I have been in the business for a long time. We both went through good and bad. Self-employed borrowers definitely, in my opinion, got hurt the worst because you've seen everything go from loosey goosey, right? Mortgage credit guidelines to lockdown. How much money do you claim on your tax returns? Are you a W-2 employee, et cetera? And you just go off the net income. And self-employed buyers out there, they, legally write off as much as they possibly can. And then they're left with their net income. And that's what us as lenders have to qualify them on. So it's made it a lot tougher for these self-employed buyers because Jeff especially, and a lot of these people, so do I, 20% down, 740 credit scores, but they just don't claim enough in income. So we have a new program out, which I'm a huge fan of, and I've been talking about it for a couple of weeks now. And what it is, Jeff, is a 12-month business bank statement program. And so what happens is, like, for instance, you have your business checking account, right? So like the company, the contractor, the AC, whoever it is, company runs all their deposits through this company. Well, what we'll do is we'll take the average deposits over 12 months and we'll use 50% of that as their income to qualify for a mortgage. So compared to, normally they had $1 million in sales that ran through their account, you and I both know they'll ultimately end up netting, 100, or maybe even lower than that on their W-2 or their tax return. And so the business bank statement program allows them to actually utilize what probably is more of their truer income to qualify for a home.
That's awesome.
Yeah, it really has been, man, because it's a good outlet. The drawback of it is you're going to pay a higher rate than you do the normal conventional loans, but the upside of it is you can own your home. It's going to be way cheaper than private money. And if you don't, people get stuck as self-employed. It's, a lot of times we get the, well, how much do I have to claim in income to qualify for this home? And sometimes the amount of taxes they're going to have to pay to qualify for that home is like $50,000, $60,000, $70,000 in taxes. And it gets kind of crazy. And so this allows them just to use their business bank statements. They make the money. They pay their bills on time. They're solid buyers. You and I both know if we had the money to lend them, we would, right? But we don't. So we have to go to this program. You may, I don't.
What are some pitfalls for the program? Who does it not work for, self-employed?
Well, it's a good question. I would, it's available for 1099 commission salespeople as well. I don't think so far me doing it that I've seen the benefit to them. Normally a 1099 commission salesperson, they're not going to write off enough income for it to matter for them to use the bank statement. So first and foremost, Jeff, just to be clear, we are right away going to try to do a normal conventional loan. The loan I'm talking to you about, a 12-month business bank statement, is only if we can't get them to qualify using their tax returns to get them the best possible loan. The drawback of the loan just is you're going to pay a higher rate. That's my opinion of it.
What's a higher rate?
It depends on credit. It depends on a lot of things, but you're going to see high sixes. I've even seen some in the low sevens right now. But with no
that being a high rate, the first home me and my wife bought in 2000, we paid points to get a FHA 8% rate.
Yeah,
actually it's like 2002, but we paid discount points to get that amazing rate of 8%. And we've become really accustomed to such low rates.
You say spoiled. We've really been spoiled too.
I had a guy in my office who had a T-bill for 30 years that was paying him 12%. and it matured, and he's wanting to know what to do with the money. And because he went to the bank, and when they told him what CD rates were, he went crazy. And he was trying to buy real estate that would throw an unleveraged 12% return. And 2009, 10, 11, yeah, not today. The prices have come up to where that's not the case, but it's definitely an interesting conversation when people discuss rates, and then you get out some historical charts, and it's definitely a big difference.
Yeah, well, we have, the one thing when I'm having conversations with people, and, you can sense pretty quick where this borrower's at. And, if they just started shopping for a home, I'll have a conversation. Hey, rates are higher than probably what you just saw a few months ago, but if I definitely know they got to go to this program, I'm going to make sure they understand that the rates are not going to be what they've normally seen. Historically speaking, though, you're dead on right. Like high sixes, low sevens with no prepayment penalty, no balloon, no adjustable. It's fixed for 30 years.
What's the highest loan to value you can go?
We can go to 90 on that. It's not pretty though. 80s where you want to be. And Jeff, the other thing, what we're seeing in a big market with this loan is jumbos. We can go, over $1 million if need be.
Is there mortgage insurance at 90?
No, it's just a ungodly rate.
Well, at least you're paying interest versus PMI, so you can deduct.
Right. Yeah.
Cool. Anything else you want to share for a self-employed buyer? What do they need to know when they're ready to start the process for the mortgage? What would you advise them? What action steps?
Well, if this loan is something like, if someone's watching this and they just got denied, right? Like, or they know they can't qualify for a conventional mortgage, you're going to have to be able to have your 12 months business bank statements ready. But the other thing that's a big deal is you got to have reserves set up in another account before you apply for the mortgage. And by the way, the application date, Jeff, is when we have a property in place, not like the pre-approval. So I'm talking before you have a property in place. You need to have money that's not inside your business account, 401k, IRA, brokerage, checking, savings, personal, whatever. Something outside of that, and you got to have at least 2 months worth of reserves. Reserves being 2 months worth of your principal, interest, taxes, and insurance payment.
Assuming this is an escrowed program?
What do you mean?
Are they escrowing for taxes and insurance?
Yeah, you have to escrow. Yeah, you have to have your taxes and insurances included. Yeah.
Cool. Well, that's awesome. Thanks for sharing, Tim. If somebody wants to get in touch with you, how would they do that?
Jeff, well, they can check us out. I'm on all the social medias like you, Tim Hart Jr. You can find us Facebook, LinkedIn, Twitter, Instagram, YouTube out there. But Jeff, they can call my cell, no problem. Just as a consultation or a resource for them, call my cell at 239-910-5668.
Cool. Thanks, Tim. That was awesome.
Thanks, Jeff. Appreciate it, man.